Hello everyone, my name is Moji, and you're watching Bitcoin Bubble News Channel. Or put money in and make the market move, whereas when you get 5 times more of an asset's broad distribution, you have more. There's been a cycle of distribution in the past where longer-term whales will reduce their assets during bull markets to make room for more liquidity. After that, during bear markets, it usually goes back to the better hands. But every time Bitcoin goes around, it spreads out a little more. The types of people who own shares in a new company that grows and goes public over time are more varied. I also think that once we reach a certain point, the volatility and confusion around the asset will go down over time. Lyn Alden recently did an interview on the Paul Barron Network where he talked about how important Bitcoin is, how Bitcoin and stablecoins work together, and PayPal's new Solana-based stablecoin. Bitcoin was worth about $56,000 at the time of the conversation. It had lost 3% in value in the previous 24 hours and 4% in value over the previous week. Lyn talked about Bitcoin's role as digital gold and how it could keep its value over time. Speaking about how stablecoins are becoming more important in everyday transactions, she explained how these two assets can live together and what this means for investors and users. If you want to see more crypto and Bitcoin news, check out our daily 5-minute crypto email before the rest of the video. It's a great breakdown and study of on-chain crypto data. And the best part is that it's free. In short, they'll talk about what experts think will happen, how on-chain crypto data is broken down, and any breaking news you need to know. To become a better crypto trader right now, click the first link in the description and enter your email address. Over 50,000 other people have already done the same thing, so I don't think this CPI report is all that interesting. Some things were in line with what everyone thought, while others were a little off, but nothing too shocking. There is a psychologically important difference of 3%, but in the big picture, there isn't a big difference between 2.9 and 3.1. And I think the bigger risk for CPI as a whole is whether they can loosen rules and still keep CPI low. On the other hand, budget deficits are a big reason for that. The fact that our debts are much bigger as a share of our GDP than they have been in the past. This is particularly true during an economic expansion, and a lot of it is now pretty fixed. For that reason, the question is whether or not trying to bring interest rates back down to a more stable level, rather than making them very low, will that cause prices to go up for things like energy or other things that cause inflation? So I don't see this as much of a case of can they get back to 2% to everyone. Instead, I want to know if you can stick the landing. Can you get it down to 2% and keep it there so that a whole new circle doesn't start in the years to come? So along with cross-border capital, which has made this point many times, I've always thought that global liquidity is one of the most important ones when it comes to Bitcoin price. And when you measure it that way, there are really 2 parts to world liquidity. One is how fast new loans are made, and the other is how strong the dollar is. To keep track of global liquidity, I often use dollars. This is because, as I already said, many foreign debts are payable in dollars. So that part about the dollar is pretty important. Either more credit can be made quickly, which would improve global liquidity, or the dollar could get lower around the edges, which would also improve global liquidity, because the denominator would change. So I do believe that we will have another good liquidity cycle in the coming years. There might be some stability there for a while as central banks try to tighten. I think we'll probably see another move upward, and Bitcoin should do pretty well in that setting. Really, Bitcoin and stablecoins have been the 2 best things about crypto in the past, right? A lot of people have become interested in these 2 things, even during bear markets and boom markets. As you may know, Bitcoin is a new way to keep value. To put it simply, it's a better form of money than most of the others we know. But because it's still small and not widely held, people try to build leverage on it. It goes through these cycles, and it's volatile as it hits its total addressable market or gets close to what it will be in the end. Stablecoins are just digital dollars. The need for dollars or desire for them is met by this. So far, there are 2 main ways that stablecoins can be used. That's the basic unit of account for trading and DeFi on different crypto sites. A lot of that will happen on Ethereum. The other big use of stablecoins is to meet the need for dollars in the global south, which Tron does well for. That's pretty much 2 different worlds of the same thing. In this way, stablecoins are very useful as a short-term store of value, like operating capital. Basically, being able to handle fluctuation is a bit of an advantage. It's basically true that the more money you have, the more you can say, I'm willing to hold something for the next 4 years. Stablecoins, on the other hand, are like a checking account when dollars are useful. We just heard Lyn Alden talk about Bitcoin and how it competes with stablecoins. Now, Let's look at what she had to say about PayPal's relationship with PYUSD and what that means for the stablecoin market. Alden talks about how PayPal's move into the stablecoin market could have a big effect on how users accept the technology and how the market works. She talks about the good things about stablecoins, like how they make transactions easier and lower volatility, as well as the bad things that they might do to Bitcoin's power. Lyn gives a fair view and explains how Bitcoin and stablecoins can each play a unique part in the financial system. Let's hear what Lyn Alden has to say on the Paul Barron network. It has been shown that network effects are important. For example, liquidity leads to more liquidity, which in turn ties the network effect together. And this has been pretty amazing. This is likely stronger than I thought. I've also been keeping an eye on some steady coins that pay out a yield. You can think of them as tokenized T-bills, things that try to give the yield to the holder instead of the provider making money off of it, even they. I mean, they get bigger, but it's not like they're quickly taking over the market. It's clear that network effects are pretty strong for stablecoins. And I'm not sure how many there will be or how strong those network effects will be, because some of it is like the bullying effect of rules, you know? Some onshore ones try to use the government against the foreign ones and things go back and forth. That being said, I wouldn't try to guess some results. I do think it makes sense for all of these groups to try to get into the stablecoin market since it's big and could be rewarding. But it's hard to say what will happen. Taking things as they are, I think Tether is in a very strong place. Even one of my prime dealers has been more supportive of Tether than its competitors in the US. So, there haven't been many strong attempts to change that. I think things will probably stay the same. Some stablecoins could continue to win market share in the United States, but Tethers are so far ahead in the world that it would take a pretty big change for that to happen. So I think the current trend will continue. I believe that foreign use is the most important one here. Our payment systems are pretty good here in the US. Running a business across borders and the steady coins have been very helpful. Regulatory arbitrage has played a role in some of it. For example, things might be easier in banks, but they tend to have more red tape. I don't try to judge timelines too much, and as I already said, there are bullying outcomes, legal outcomes, or politician outcomes that I don't know much about. However, I can continue to be structurally bullish on the market cap of stable coins. From what we've seen so far, it looks like the winners are benefiting from pretty strong liquidity network effects. I think of a long time. I mean, it's been 15 years now, and I think that trend of less instability will continue for another 15 years. Basically, it's my opinion, mostly because a lot of people share it. If a lot of people don't hold on to something, one big player can use power to blow it up and move the market. And it's continued competition with stablecoins, which shows how important both are to the changing world of digital finance. As we continue to talk, we'd love to hear what you think. In a world where stablecoins are becoming more popular, what do you think the future holds for Bitcoin? What do you think the market will be like after PayPal launches its stablecoin? Check out these two great movies on your screen for more daily Us crypto news. Click now, and we'll see you in the next movie.